Remember, we have been asked to prepare a note for trade and other payables. We have been asked to prepare a note for trade and other payables. In your note for trade and other payables, you are going to have SARS pay as you earn. You are going to have SARS pay as you earn. And then you open it, SARS pay as you earn is 44,800. You have pension fund. These are amounts that you owe, 15,800. Right. Now, you go back to our adjustment. To the amount of the SARS pay as you earn, you are going to add this amount that we owe. We're going to add plus 2,880. And then to the pension fund, we are going to add 1,950, as well as the contribution that we have not yet paid over of 3,900. It is the deduction from the employee plus the employer's contribution. Fine. These are the amounts that we must pay over to the pension fund. I hope that is clear. But again, we owe this employee. We are going to open account for creditors, for salaries. And that will be the net salary of 10,538 that we owe to that person. Right. Let me put this aside. Adjustment number 10. The rent has been paid 3 months in advance. Note, the monthly rent increased by 1,250 on 1 November 2013. Now, what they are simply saying is that this amount, 234,950, is for 15 months because we paid 12 months of this year and 3 months for next year. Therefore, we must subtract the amount for 3 months, but we don't know that amount. Now, how are we going to calculate that? We are going to say the 234,950. Remember, this is for 15 months. Some of you, I know, would immediately divide here by 15 to get the rent per month. But it will be wrong. Why? Because the rent changed during the year. Therefore, you cannot divide by 15. You would be able to divide by 15 if the rent had not changed during the year. Now, what we need to do is to plot our financial year. Our financial year started on 1 March and ended up on 28 February. But we still also paid for March, April, and May, which means we paid for a further 3 months. Now, when did the rent increase? The rent increased somewhere on 1 November. 1 November. Which means here we have November, December, January, February. 4 months. And then before that, it means now we'll have 8 months there. Now, which means now, for the first 8 months, we paid a certain rent, but from 1 November, the rent increased by 1,250, which means for the next 7 months, we paid an extra 1,250. Now, what I'm going to do, I'm going to get the extra amount for the whole period, 1,250 multiplied by 7, 1,250 by 7, it gives me 8,750. Now, the next thing that I'm going to do, I'm going to take the total amount that was paid, 234,950, and subtract the increase, 87,50. 234,950 minus 8,750. It gives me 226,200. And then I'm going to divide this by 15 to get the value of the rent. To get the rent before the increase. To get the rent before the increase. Now we have 226,500, 200 divided by 15 because we paid the rent for 15 months. It gives me 15,008. Now this was the rent before the increase. Now because I have the rent before the increase, I can simply add the increase to get the rent after the increase. Now I have the rent before the increase was 15,080. It increased by 1,250. Therefore, the rent after the increase would be 16,330, which means from 1 November, we were paying 16,330 per month. Now, for the 3 months that have been prepaid, then you multiply this by 3. That has been received in advance. Multiply by 3. You get 48,990. Right. Therefore, in our rent income, we are going to subtract 48,990. We're going to subtract that. That was adjustment number 10. And that adjustment number 10, this is a liability. The amount that we receive in advance, this 48,990 is a liability. Therefore, it must be shown under trade and other payables. You will have income received in advance. What is that amount? 48,990. 48,990. Right. Remember the audit fees. Let's go back to the audit fees. This amount we owe. It has not yet been paid of the 12,000. Therefore, here you will, under trade and other payables, you also have accrued expenses. Accrued expense of 12,000. Right. Let's move very quickly. Adjustment number 11. The loan statement from Sparks Bank reflected the following. Balance at the beginning. Now, what we need to calculate is the interest capitalized. Now, you can do this very easily by reconstructing your loan account. At the beginning of the year, we remember it increased on the debit side, and on the credit side, and decreased on the debit side. We have 948,000. At the end of the year, carried down is 600,000, which will also be your balance brought down of 600,000. During the year, we paid how much? 423,000. And then the missing amount will be your interest. Now you add the two amounts, 423,000 plus 600,000. They give you 423,000 plus 600,000. They give you 1,023,000. 1,023,000. And then you subtract the amount that you owed at the beginning of the year, 948,000, which means the interest for the year was 75,000. You will see, if you have 75,000 here, and then you will say this minus that plus that, it will give you that. Therefore, our interest for the year is 75,000. Where is our income statement now? Here it is. The second page of the income statement. There it is. Your interest expense will be 75,000. How did we calculate it? We said 423,000 plus 600,000 minus 948,000. But I used the accountant to make that calculation.